Whoa, just like that. It says we're live. That was fast. No countdown, no nothing. You just hit the button and go live. Hello, everybody. This is Ray, and welcome to another Bearded Men of Real Estate show, episode number 96. So say hi, Dan.
Hi, Dan.
We've done this a long time now, like a year and a half.
Dude, no, aren't we on? We're on
2.5 years. 2.5 years, yeah.
2.5 years.
2.5 years.
Wow.
So thanks so much for joining the show. As you can see, we're using something different. You see this little comment below. It says StreamYard. Live viewer comments show up on stream. You also see the thing at the top above Dan's head that says StreamYard. So some of you were with us last week when there was like a massive technological issues and crashes, and we had to go from Be Live to Zoom, and then I edited it and put it on YouTube so to make it a little more pleasant for you guys. Hopefully that's not going to happen. We have some very special guests with us too that I'll introduce shortly. We have a ton of news to get into. So we're going to be talking about mortgage rates. We're going to be talking about applications. There's a whole bunch of people that have applied for forbearance. So we'll get into what exactly that means, and maybe if you should or shouldn't do that, and what it means for us later in real estate. If all these people have applied for forbearance, what's that going to do to our economy? What's that going to do to the marketplace? What's that going to do to lending? Dan is going to try something today. Do you want to say what you're going to do for the first time ever in the world?
We can tease it. Hold on, real quick. I'll be right back.
Okay, while he's teasing that, I'm going to go ahead and bring up our first comment. Yay, Howard Harold Broadsley. Hey, gents. Hey, sir. If you don't know, Howard is our Israeli correspondent. And then Dan went live too, just to say check. So if you are joining us live, it's every Wednesday about 12-ish Central Time, 10 Dan time, 1 o'clock on the cheese toast. You can make comments, and then we can talk about you, or we will talk about your comment. So Dan, what's the Oh my goodness, there it is.
What?
There it is.
That was it. That's it.
There it is. For the first time ever, Dan is going to try something. So grab a drink and join us for this happy hour of power, I guess you could say. David Fresquez already joined the show. What's up, man? So let's bring on a couple of our guests. We have another one that's going to join as soon as her internet reboots. So first, let's start with Beauty. You want to start with Beauty?
Yeah, absolutely.
All right, everybody, welcome Tim Macy of the Tim Macy Show. Probably not the beauty you were expecting if you saw her.
Mm-hmm.
Yeah.
But look at that background, Tim. That is quite the background.
Hey, I figure what is appropriate for the bearded men in real estate, and the first thing I thought was Care Bears.
Because we care. That's
because you care. You care. And you're always pushing people to be more. You know what I mean? Can we be more?
Thanks, Tim. I appreciate that.
And look at that.
Another person where are you, by the way, Tim? What market are you in?
I'm down here in the great state of Texas, in the city of San Antonio.
Dignity.
I
just love that word.
And look at that beard. I love that beard coming in, buddy.
Dude, it's the Corona beard with the Corona cut. I mean, we're Corona'd out. Yeah.
When you grow a beard, it kind of looks like a conquistador or something. Like you have a very the Musketeers type of shape, like a Monte Cristo type of. You could be in a black cape and
Dude,
it like pop, and then with the hair slicked back,
you're very good at trying to make my horrible beard sound not that horrible. No. So I appreciate that.
Edward Carlos joining the show. He says happy hump day. Melissa Mara is here. She said holy Care Bears. So thanks guys for joining the show. I'm going to go ahead and bring up the actual Beauty.
There we go.
Michelle Calkins.
Hello.
So if you've never seen Michelle Calkins, then you're missing something. Go find her on social media and look for Tubbs. And we were just talking about this, Michelle. How did you become known as like this realtor who sits in Tubbs? What happened?
The sexy bath realtor. So
there you go.
Just look up hashtag sexy bath realtor. It started probably about 6.5 years ago. I was new in the business. And when you go to all the houses and, we see lots of ugly bathtubs, it just was like, sarcastic, like, ooh, that's sexy. I was like, get a picture of me in it. And the next thing I knew, I just continuously kept doing it. And then obviously, like when you find really sexy bathtubs, it's like, yes, this is great. So I've just been doing it, just rolling it out. I kept the hashtag going and I just have fun with it. So yeah.
And fun side note, she almost did this.
Let's catch on.
Oh,
What?
Go ahead, Dan.
And just a fun side note, she almost did this entire interview in a bathtub. So
Yeah.
That's right. We wish that would have been
fun.
epic.
Nice.
So, realtor, be careful what you take pictures with. You never know what's going to catch you on. You don't want to be called the toilet realtor. So, okay. So, I'm going to drop you down. We have another guest that's going to join us shortly, but she had to reboot because of her internet. We've got a lot of comments coming in now, so I appreciate you guys doing that. Melissa Mara says, but your curl is on point, Tim. David also says, habla español, señor Macy. And Ryan says, what the hell is going on here? Hey, Ryan, thanks for joining the show, buddy.
Yeah, we don't know. And then it's just going to get even better later.
It will get even better later. So go ahead and grab a drink, join the show. This is the brunch lunch happy hour, so it's a little more informal. However, before we get too informal, we are going to get into some really good headlines. We're going to crush through those headlines fairly quickly so that we can get to our guest and have a larger discussion about real estate, what real estate looks like now, and then get some predictions from coast to coast of what real estate might be looking like in the future. Oh, wait. We just had our other guest join. So she had to restart her internet. I'm going to bring her up now.
Okay.
There she is, Marley. Yay!
Guys, this is so.
Oh, she's got bad
I was
internet.
walked off on the back. Oh, do I?
Yeah, it's like choppy. You're choppy, but it's great to have you on the show. So, so Marley's from South Carolina, and she does a whole ton of videos. So if you don't follow her on Instagram, you got to follow her on Instagram. She does a bunch of story videos, that kind of thing. And Marley is known as the South Carolina realtor. So there you go. I'm trying to find. Oh, I can't play it. I was going to bring up one of your videos, but I can't play it. So we'll have to save it for later. It's maybe.
It's really good stuff.
Maybe you can reshare it. It's a cup dance. So if you're not following Marley and you don't see the cup dance, you have to find the cup dance. So it's funny.
I'll reshare. I'll put it on my story.
Perfect. All right. So I'm going to drop you down now.
Like she's 18,000 miles away.
That's true. She'll say something, then we hear. All right. Tim says, let's see. Tim says he's trying to get his Clark Kent on. Tim, who's waiting in the host lobby, is commenting on the show as well. So he's going to comment as a guest star. Super meta.
Super meta right
now. Howard says, what is Michelle's Instagram? So Michelle, let me bring you up. What is your Instagram, Michelle?
It's easy. At Michelle Calkins. I know. Yeah. I have it. How do you put the name up? Because you can see my name. So I don't know if you can add that.
Let me see. There's some different settings. So this is the first time that we've ever used StreamYard. And there are some different settings and stuff that I can use here. Let's see if I can add the guests must authenticate. I don't know. We'll figure out. I think there is a way for me to do this because I saw the setting earlier. I just have no idea. Oh, there it is. Wait. Bam. There everybody is.
Yeah.
So Michelle's a smart one and put her Instagram handle as her name.
Damn, I should have done that. I think we can change it. Because Dan and I played with this, and I know Dan, you can change the name, Ray.
You can? I don't know how to do that.
I'm not going to mess around.
Yeah,
we've got a really good system that we're going to be used for streaming in the future. It's probably a post-COVID switch that we'll make. So be looking for that. I'm excited about it. I think it's going to be really good software, super high quality. It's like 4K-ish quality. Super, super nice. So, all right, guys. Well, thanks for doing the show. I'm going to drop you down. We're going to crush some headlines, and then we will get back to you. Nice beverage, Tim. I love those people. Okay. So Dan, before we get into these headlines, do you want to real quickly tell people what we are actually all about?
I'd love to. Now, when Ray and I met, it was 2072. You remember 2072, Ray?
Yeah, it's the Wayback Machine.
Yeah, you remember that? It was, the year 2072. And you were a cleric. Do you remember that? And this is maybe a little bit obscure. Now, you were a cleric and you were on, so part of your job was to support the council, and you were always on the lookout for sense offenders. Do you remember that when you had to?
Yeah. I was a judge, right?
No, I know where you're going, kind of, but no, little different concept. And your main martial art was actually called gun kata. You fought with guns. Do you remember that?
Oh yeah. What is that movie called? I loved that movie because the gun kata.
Yeah, when things are in balance, they have also known as equal.
Equilibrium.
Equilibrium, yes.
Is that the name of that movie?
Yeah.
The name should have been called Gun Kata because that's an amazing
dude.
Like that scene where he's doing the form. So I've spent 15 years in martial arts. So
Yes.
I've always been like martial arts and stuff can take guns away. But when you do a gun kata, that is, I remember watching that.
They created an entire new martial art for that movie. I that's been one of my favorite movies of all time. I've been doing the episode year kind of thing that, 96, 97, but that's been getting a little predictable. So I was like, you know what? I'm going to go to the future. I'm going to go to 2072 and see if Ray can pull this one off. I
totally had looked up movies from 1996, so I was already ready. And then you pulled that one, so I was like, oh man.
And then here I come with the curveball.
There you go.
So no, Ray and I did not meet in the future in 2072. We met back going about 3 years ago, and I had already had an idea for a show because I am in fact a bearded man of real estate. And when I met Ray, I noticed something very specific about him.
Probably biceps.
He only drinks beverages that are pink. Did you guys know that?
You'll never know.
I noticed that obviously he had a beard as well, and he had an actual format layout for a show. So we combined our Wonder Beard powers, and it's the same show you see today. But honestly, Ray and I also noticed that we love giving more value to our clients up front. So the show is about being more as an agent, but also being more as a human.
And one of the things that we find out by being a realtor and by being on this show, since we have to know this information anyway, it made sense for us to push out a show dealing with this information because we were having a lot of offline conversations about mortgage rates and what was happening in the markets. We thought, we should really talk about this publicly. For us, it comes up all the time. The very topics and headlines we're going to be talking to you about today have already come up with me this week when I have seller appointments and buyer appointments. So hopefully this will help you as an agent, but also you as a consumer. If you're checking this show out and you're like, what are these bearded guys doing? Just hang out for the headlines at least so that you know what's happening in the marketplace so that you can make the best decision for you and your family regarding your home.
Yeah. Yeah. And
all right, Dan, are you ready?
Yeah, absolutely. Let's get into them. Then I'll make my.
All right, let's get into
In the year 2072, we are going to have sound effects.
We're going to have sound effects. We have the option right now, but it's just, it's tradition at this point.
I know. I don't think it'll ever change. You got a few.
All right. Howard asks, what's Marley's Instagram? So if you happen to be a guest on the show, you might want to check out the comments too. Be sure to put your Instagram handles in there. You can link it up. Tim Macy said, put your eyeballs back in your head. That was what Melissa Marr told Tim. David said, forget IG. I want to know her TikTok, to which Michelle said, the Michelle Calkins TikTok. There you go. It's coming.
And by the way, so Sean, I think it's Sean is just now followed and liked. By the way, if you like our page, the Bearded Men of Real Estate Show, go give us a follow. Follow is the important thing. That's going to notify you when we go live and things like that. But Sean, every week I do a funny thing. Well, who knows if it's funny, but
it's not really funny. It's just something we do at this point.
It's just something we do. I come up with a movie on how Ray and I met that's obviously farcical, and then he tries to guess. So that's why I was talking about equilibrium. Marley is at Things Marley Does, I believe.
Melissa Mars said if you change the sound effects, it wouldn't be the same. So yeah, I agree at this point. Well, at this point, we'll have to create us doing the sound effect and then hit the button and it's us doing the sound effect, which,
I think that's what we'll do.
All right. So let's see. There she is. Marley Presswood said, Things Marley Does. She's hilarious.
Yeah.
Tim Macy said, Tim Macy Realtor, if anyone dudes want to follow me. I have a feeling I'm not the guest that will be getting new followers. That's true, Tim. All right, so let's get into the first headline of the week. We have mortgage applications rise as rates drop to a 30-year low. But as you can see from the headline, it's all refinances. So mortgage rates are at a low, this time the lowest in 30 years, and mortgage applications rise as homeowners refinance. Volume was up 7.3% from last week, according to the MBA, which is the Mortgage Bankers Association seasonally adjusted index. The average rate was 3.45%. That's down from 3.49%, and applications are 192% higher than last year. So the decline in rates, despite the Treasury yields rising, is a sign that the mortgage-backed securities market is stabilizing and lenders are successfully working through their lending pipelines, which were so clogged earlier because of the refinances. That quote is from Joe Kahn, MBA economist. The mortgage applications to purchase a home fell for the fifth straight week, which is no surprise to realtors who are in the marketplace. It was down 2% from the week earlier and down a striking 35% from the year prior, which for me is not that striking. I thought it would probably be down a lot lower.
Yeah.
Kahn goes on to say that the purchase market is still expected to rebound as long as public health measures to reduce the pandemic spread are successful and result in a broader recovery. The article from CNBC goes on to say that home sales are expected to be very strong in 2021, based on a report from Freddie Mac's cautiously optimistic report. So there you go. It looks like we have better news coming in the future. Current short-term news is not great, which is kind of nothing new.
Well, I think there's two parts of this. I think we're going to have a lot of short-term bad news, but hopefully that will help in the long, it'll all fix it. It'll all resolve itself in the long run. But I worry about these short-term bad news. What are the long-term effects going to be, right? So what
are the long-term effects of the short-term bad news? Is that what you're saying?
Yeah, the short-term bad news. Maybe we get over these things quickly, but there's just so much changing. The market is so volatile right now as far as lending guidelines go. They change literally every 4 seconds right now.
Yeah, it's been really fast lately.
That, when are we going to keep up? And then once people, we get our economy back going and people, either they're done with their they're pulled back from furlough or whatever it is, then how long is it going to take us to get chugging again, to get that train going again? Is it going to be instant or is it going to take a while? And I worry that it's going to take a little while to get going again,
That's definitely a question that I want to discuss with our panel in a little while.
Okay.
What is going to happen? How long will it take to recover? So there's something for them to start looking up in their crystal ball.
Well, and haven't we already kind of covered it? Did one of the stories maybe 2 weeks ago say it, where they're already looking into this gap? So if you're furloughed and you come back, they're going to ignore the gap just like it never happened, in work, because technically it's a pause in work history, right?
Kind of. Yeah.
So
I wonder they would probably ignore that as work history goes. That would probably be apropos, or else it's going to disqualify so many people from getting a mortgage. I think they're going to have to do.
No, I'm saying have to. So that, these are the things. Our comments are good.
Speaking of forbearance,
if we had a little thing about forbearance, that would be good. Whoa, dude, these stories just jump right in. It's really crazy. Mortgages and forbearance. So this is one of those, to me, Ray, I don't know if it's the same to you, but it's a little bit of one of those gotcha headlines when you actually read the article. So mortgages in forbearance jumped 1,396% in 1 month. Now, what does that sound like to you, Ray? That it went from, 5 mortgages to 80 billion mortgages?
Dire straits, man. Dire straits.
Okay, so now just let's listen to the numbers. And now none of this is good. I'm not saying anything this is good, but this headline makes it seem way worse than it is. So this is from Housing Wire. So with unemployment claims rising weekly, the number of homeowners asking for respite on their mortgage payments has predictably increased by a sizable amount. The total number of mortgages in forbearance rose to 3.7%, in the week of March 30th to April 5th, up from only 0.25% of all loans that were in forbearance the week ending March 2nd. Okay, so that's the month they're talking about. So it was at 0.25% and went to 3.74%. So the headline makes it sound a little bit like 50% of mortgages or more are in forbearance. At this point, it's only 3.74%. Okay, so not as bad as the headline seems. None of this is good news, but why this big scary headline? Meanwhile, forbearance on loans backed by Fannie Mae and Freddie Mac increased to 2.44%, up from 1.69% the prior week. Now, this is a quote. The nationwide shutdown of the economy to slow the spread of COVID-19 continues to create hardships for millions of households, and more are contacting their servicers for relief in accordance with the forbearance provisions under the CARES Act, said Mike Fratantoni. Love that last name, Fratantoni. He is the MBA's senior vice president and chief economist. The share of loans in forbearance grew in the first week of April, and forbearance requests and call center volume further increased. With mitigation efforts seemingly in place for at least several more weeks, job losses will continue, and the number of borrowers asking for forbearance will likely continue to rise at a rapid pace. So
there's a good comment that I want to bring up now from David. He said, how many are actually needed forbearance?
Right. That's not a stat that, and we talked about that on the show. Was it last week where, we're urging people, if you have the means, still pay your mortgages. Because in most cases, they're just saying you're just not paying, but it's going to, then once you can pay again, it's all going to be due. It's not necessarily only going to go on to the end of the loan. That's not the case. You need to call your actual servicer to see what's going on. So I would love to know that stat, but is that ever going to be a stat?
And one of the things we did last month, just to kind of see as an experiment, what would happen is whenever it was time to pay the mortgage, we called the company and said, hey, what if we can't pay? And they said, that's fine. You don't have to pay. Just pay next month. And so that was an informal comment made by the person on the phone. And I'm wondering how many other people were kind of told that maybe that's not exactly accurate as how forbearance work. Because basically they were just suggesting that we skip a payment, but they didn't really have any paperwork or say, yeah, it's forbearance, or yeah, it's forgiven, or yeah, your rate won't increase. So I'm wondering how many people are applying for forbearance that actually need it. That's a good question. How many are applying that actually receive it? And how many are applying that actually know that this lump sum amount is going to be due at the end of the forbearance period? It's not forgiveness, it's forbearance. So we will see when those new refis come out towards the end of the forbearance period and people trying to refi their forbearance payment into their mortgage.
Yeah, because then you have to requalify essentially for that. And then it'll depend on where rates are at that point.
Mm-hmm. Andrew, you're going to have to help me with your last name a little bit. Carbajal? Andrew Carbajal says putting a lot of people up in foreclosure. Yeah, that could be. Sean Stiles said probably not as many people will request it. That's a good point too. Robert Sampson said, wait, since when did Dan Ludwig start saying economist the normal way? What has happened? Well, we're a far more professional show now.
Yeah, obviously. Kitty ears, and I'm gonna maybe try one of those in a minute. Oh, you missed it.
There you go. And we have some other good comments about it, but since we wanted to bring our panel in for that discussion a little bit later, I'll see some of those comments.
Yeah.
Okay. So let's get to the next headline here, which is just as much of a fun gotcha headline as you see other things that's happening. Also, you might see a text from my electrician who's over at my house right now doing stuff. All right. So Chase now requires the 700 FICO score, 20% down payment to buy a home. That's a huge change. So there's a whole bunch of banks that have raised their FICO limit. Some have said, some servicers, I guess it's not servicers, some lenders of those banks have said, hey, FHA has raised the lending requirements when it's not actually FHA. It's that bank's own policy. So this says many lending institutions are raising the FICO limit in order to provide loans with more qualified buyers during this time when many homeowners are seeking forbearance. Chase now requires a 700 FICO score and a 20% down payment to buy a home. It's a quote, due to the economic uncertainty or making temporary changes, which allows us to more closely focus on servicing our existing customers. Chase Home Lending Chief Marketing Officer Amy Botanabus said in a statement. Other banks are also tightening regulations. You can see here from the article as I scroll down a little bit. United Wholesale Mortgage is the second biggest mortgage lender in the country. They announced that they will do a re-verification of the borrower's employment on the day their loan is scheduled to close. Now, for a lot of you in the industry, this is nothing new. For me, I've had this happen the day. I've always tell my clients, like, don't make any job changes during the process. Don't even get a promotion. Let's just stay where we are. Because sometimes when someone's promoted, it's actually an outside temp type service that takes on that promotion so that they can get the promotion. And if that happens, and suddenly your employee or your client who's still working at that company, but in order to service the raise, if they had a hiring freeze or something like that, they'll send that person and hire them as a temp in order to give them the raise, but they're still at that company working that position. So if that stuff starts happening, then that throws the loan for a loop, especially on the day of when they do an employment verification. So that's nothing new, but it is something new for them. The purpose is that it ensures the borrowers are actually still employed with their mortgages. Here's a quote that I thought was pretty good from the CEO, Matt Ishabia. I'm really struggling with names today. Sorry. Maybe it's the mimosa. He said, if people don't have a job, I'm not going to put them in a bad position. By doing this, we're protecting borrowers, the company, and the country. So I thought that was a really good quote. Wait, there's comments happening right now. He said,
our guests are going crazy.
Yeah. Bring on the guests. Bring on the guests. Code word chimpanzee. If one of you guys could say chimpanzee to bring us on, that would help. So I'm reading some of the private chat. Code word chimpanzee. Okay, let's bring on Tim. So it's Tim, chimpanzee. Tim, chimpanzee.
Ray, I don't think you're supposed to let them know what the private chat is going on.
Oh, yeah. Okay. You're not supposed to say out loud the chimpanzee code word?
No. Everybody shouldn't know the code word.
Smoother if I could have worked that into the article. Like, so here you have Chase being a bunch of monkeys. You call them chimpanzees.
Yeah.
All right, Tim, what do you think?
It looks like this headline was written by a chimpanzee.
Yeah, there you go.
There you go. See, Dan knows. Dan knows what's up. All right, so what do we want to talk about? You know, we hit a couple things.
We hit a couple of things. Hit the last thing first, and then I want to have a larger discussion with the whole panel about those other two topics that we've already done. But if you have something specific, have you experienced? Because I think we've talked about this off the air. Actually, I think sending texts back and forth of different companies making some changes. So what have you seen as far as the changes in policies of some of the investors and mortgage companies so far?
Yeah. So, I mean, we've had two deals fall apart on, worries about COVID and everything. So, I mean, it has a very real impact. And I know, you talk to some people in the industry and they're like, oh, it's fine. I put 4 under contract this week and everything's rainbows and butterflies. Rainbows.
Background, right?
Yeah. It's not, right? Like it's definitely not. I think we're sitting on a bunch of uncertainty right now, obviously. And anybody that's giving a prediction of what can or what's going to happen, I mean, it's just a prediction because so much of what we're going through is based on what we humans do, right? Like if I get, if I feel the need to go out and everybody else feels the need to go out and we humans increase the, situation, then we have a problem. And so you can't really make a prediction because nobody can predict how people are going to act, what people are going to do, and how long this thing's going to take. Yeah. So a ton of investor
at the end of the show for our prediction segment.
Oh, my bad, man. Come on, man. You're going to have me on here. I'm not going to start making predictions and pontificating, Get out of here. No, look.
What are you, no spin zone? Keep your points.
Yeah, I'm at 2 deals down. I've lost 2.
So, and the 2 deals that fell, you said it was through coronavirus concerns. Is it because the lender pulled out in situations like this? There were 2 situations that I had personally where a client had pre-approval, and the lender called them and said, "Hey, we can no longer pre-approve you because of these changes. We'll switch lenders."
Yeah.
Were you guys able to do that, or is the deal just stopped and waiting, or is it totally terminated and you have to find another buyer?
Yeah, no, it was all the lender problems, same thing. Like if one lender has a problem, we can usually find another lender to get it done. We've had that happen and it's pushed a couple closings, but those are all still moving forward. The 2 that bailed are because they were investment purchases and those people were like, man, we don't want to buy anything as an investment right now. And as an owner of an Airbnb that's sitting vacant for the foreseeable future, I can understand why they pulled out of stuff.
Yeah.
Well, you mentioned 2 words that make me want to bring up another guest. One is the Airbnb, and that's the word I want to sit on because we actually have one of our guests that I would classify as a bit of an Airbnb expert. So let's get rid of the chimpanzee, Tim, and bring up Michelle. Bye, Tim.
So let's
so Michelle Calkins. Michelle, what has been your experience with people that are currently under contract, have you seen anything fall through? Do you know of any other realtors that have had something fall through due to a change in lending requirements like this? Or have your deals pretty much continued to close? And also, you have some Airbnbs and some experience with Airbnbs right now in your marketplace. What's going on with those?
Well, and let's frame that. So, Michelle, tell everyone where you're at and why there's a big contingent of the Airbnb thing happening.
Okay. I knew you were going to ask me that, so I was already like, what deals? Okay. So I live in Lake Arrowhead, California. I'm Southern California mountains. If you don't know where that's at, I'm about an hour and a half away from LA and Orange County, 2 hours away from San Diego. So we are a highly vacation community. 25% of us live here full time. The rest are all vacationers. So the Airbnb market is like explosive here. Has been, especially the last like year and a half for sure. Pretty much, I would say 95% of the deals that we close are people buying it as a vacation home, but then primarily instantly want to turn it into Airbnb so that they can help their mortgage get paid for. I do have 2 Airbnbs. I have one here, and then I just bought a house in Idaho and listed it on Airbnb March 3rd. Like, so
wow.
So I feel all of those effects, and it's definitely been something that I'm like, we're gonna be okay.
We're gonna be fine.
Woosah.
Yeah. So I haven't had a deal fall out. I've been writing 4 open escrows, kind of writing. They're extending. I think we're going to get them closed. So that's really good. I had one open up and one close a really quick cash deal that did go through during all of this. I have had a partner, long VA loan, like all these repairs. It had probably already been in 60 days. And the parents of them just said, hey, probably not a good idea to buy a house during a pandemic. And they just canceled. So that was like, oh, ouch. So did have that happen. But
okay.
Yeah.
Well, follow your stories, by the way. And it's such I'm not an Airbnb owner yet, but I want to be one day. And so hearing you talk about the Airbnbs and what's happening and how the laws are changing, all that stuff, it's really cool. So definitely check out our Insta for more Airbnb stuff. I'm wondering if Marley, chimpanzee, this code word is not working. First off, I can't do the code word. I cannot do the code word.
I'm like just rolling with the chimpanzee.
Yeah. Okay, so let me bring up Marley and see what's going on in South Carolina. Marley, you there?
Oh, is my internet any better?
Yeah, it is actually. It's
I
quite
moved
a bit
around. And there's some bass on my wall.
There you go. It looks like Dan's frozen now. So I'm going to drop him from the stream and it's just being you. Okay. So yeah, it's okay. It's a little bit of backlight. You're silhouetted, if you would, but it's fine.
Yeah, I know. I'm trying.
Is that a bass on your wall?
Yeah. It is.
That's fantastic. Okay, so what have you seen so far? Have you seen stuff fall through? Have your deals kind of continued to close? What's happened in South Carolina?
So I have not thankfully had any deals fall through. I have had some people that are now waiting because of it. And I've also had one client lose their job. So that was pretty much, it sucks for everyone in general. But all my deals are still together. Airbnbs here are definitely at a standstill. But overall, I mean, I think more cash people are coming out in Charleston than any type of financing. Yeah. So
have you had the situation in which people have kind of tried to take advantage of it? I mean, we've heard about a couple offers coming in and the buyer was like, our offer reflects the uncertainty in the marketplace due to COVID-19. They're like $50,000 off a list price. Have you seen anything like that starting to happen?
I see that all the time. Yeah, that's definitely something that's happening right now. Everyone is using that line. I may have used it as well.
That is wild.
Yeah, I mean, sometimes it's working, sometimes it's not. But we are seeing it. I mean, no one's listing their house right now. Every single part of the market is either 20 to 40% less than what was on the market last year.
So you're seeing a big tightening of inventory.
Yeah, we have about 2 to 3 months worth of inventory right now.
Yeah,
nothing new. If you don't like on the market right now, you're not getting anything.
We're all seeing a tightening inventory.
Yeah.
Okay, cool. Well, we're going to come back to you in a little bit. I'm going to go ahead and drop you down. And then Dan, are you up next?
Hey. I don't know.
Yeah. So speaking of the tightening of lending requirements, this is going to sound like a real professional transition until I called it out as a transition. So speaking of the tightening of bank requirements, there's some banks that are trying to loosen some items in order to get deals done. Dan?
Yeah, it was weird. By the way, I'm sorry if I dropped out there. It was my internet. I thought it was. It wasn't.
That's okay. I put you back on screen for a brief second, and you were just like frozen, looking at the camera. I couldn't tell if you're just really intently listening or if you were actually frozen. So no.
Well, when I realized that it's possible I dropped, I did that. So
that's you froze like.
Yeah. So you guys couldn't tell. All right. So banks will soon be able to postpone some appraisals until 120 days. Wait for it, after a mortgage closes. Dun, dun, dun.
What?
Citing the need to extend financing to credit-worthy households and businesses quickly in the wake of the national emergency declared in connection with COVID-19, a trio of federal banking regulators announced Tuesday evening that banks will soon be able to delay getting an appraisal on a property for as many as 120 days after a mortgage closes. That was all one sentence. The Board of Governors, by the way, I've never heard of these things. The Board of Governors of the Federal Reserve System. Have you heard of them, Ray?
Yeah, actually I have. I have a video coming out on this stuff.
The Federal Deposit Insurance Corporation?
Yeah.
And I've heard of this one.
Yeah.
And the Office of the Comptroller of the Currency. I've heard of that one. Announced the changes Tuesday, stating the rule change will be in effect until the end of this year. It should be noted that the rule only applies to banks under the oversight of the Fed, FDIC, and OCC. Are you down with OCC? Okay, sorry. More importantly, the rule change. Thank you, Ray. I appreciate you going along with me. More importantly, the rule change only applies to loans kept in banks' portfolios. Okay, so there's a couple of caveats that are kind of big ones. Now, loans sold to or guaranteed by the Federal Housing Administration, Department of Housing and Urban Development, Department of Veterans Affairs, Fannie Mae, or Freddie Mac will still require an appraisal before closing per each agency's or company's rules. Meanwhile, each of those agencies has relaxed their appraisal rules in recent weeks to address social distancing protocols or stay-at-home orders in various states and cities. So in each case, the agencies moved to allow exterior-only appraisals known as drive-by, or in some cases, desktop appraisals where the appraiser doesn't inspect the property or comparable sales. Instead, the appraiser relies on public records, multiple listing service information, and the other third-party data sources to identify the property characteristics. So the actual, we've talked about on the show, and I've had a couple happen for me where it's just a drive-by appraisal or it's a exterior only on a regular before all this was happening. So those things aren't terribly new.
I've had some drive-by / exterior only, but it has been only for loans that have a sizable down payment.
Yeah, 20.
Yeah,
mine have been 20
plus, maybe even 100.
Yeah. So, but what do you think about 120 days after? So that is 1, 2, 3, 4 months. So you close on your loan. 4 months from now, you get your appraisal and it's off. What do we do? And what documents need to be in place to keep you essentially attached to, because you still have to be protected, right? If you have your appraisal contingency.
So it does have to appraise. The question that I have is, what if it comes back and it doesn't appraise?
Right.
So one of the things that allows, though, is it does allow for some time for the COVID stuff to chill out in case there are properties that are being sold at a discount because of this situation. It allows those to kind of go through and you get on the other side of those to where you can find a real value of the property. Maybe what happens is the bank has to hold that loan and they can't sell it until that appraisal matches the loan value.
Okay.
Maybe that's one thing that happens. I don't know. I've been trying to think about that. Like, what exactly does that look like if 120 days later it does not appraise?
Well, how much can change in 120 days? If the appraisal process isn't started until the 100th day. That's a lot, especially with what's going on. And even if things were normal right now, we're transitioning from spring to summer and so on.
Or by some predictions, Tim, the entire world market crashes. And at the end of that period, you have home values that are super, super low. What's going to happen?
Chimpanzee.
I'll go ahead and bring up Tim so we can comment on this.
Hey,
I said chimpanzee,
Tim.
Tim.
I'm back. I'm back. All right, we want to talk apocalypse. Is that what we're talking about?
Always do.
Yeah. We're going to talk more in detail at the end. But what do you think about this 120-day wait to appraise situation after close? How's that?
I mean, there's so many things that are coming out of this that are just
that's a response. Just
yeah. I mean, the thing is, it's policies, right? Like big policies. They always come out with these policies that are going to try to help the situation, and then 2-3 months later, you find out that they're all a complete racket.
Yeah, that didn't help at all.
Yeah,
quote unquote policies that are supposed to quote unquote help.
Yes, exactly.
Okay, well, I want to get more of your comments towards the end of the show. Think about that. We've already talked about also the mortgage rates, what's going to happen to them. So I want to talk about what a rate's going to do, what's the market going to do. But we have a real doomsday scenario coming at the end of the show. And I'm going to read that article with you guys and kind of get your opinion.
I love doomsday. I'll talk doomsday all day.
Awesome. There you go. Yeah, his wife is the happy one, if you followed there.
Yeah, if you haven't noticed. We have some good comments.
Despite the Care Bears background.
Well, the background is sardonic.
Okay, let me go up to. So I was saving some of these comments, but you guys are having a ruckus the whole time in there. So let me put up some of these comments. Definitely. There you go. Robert Sampson said, definitely an interesting time. David said, by scaring consumers, it pumps the brakes so the banks can focus on the mandated loans versus consumer loans.
Interesting.
They can do both.
Always interesting.
Let's see. Pete Thorpe said, I'm late. Damn it. Yes, Pete's late. Okay. You should allow his comment. Just did. I should not allow his comment. Oh, it's too late.
Oops. Too late.
So Pete Thorpe says appraisal is just an opinion of price. You could argue that real estate agents do an opinion of market value, which is closer to what the price should be based on market data whenever we do a comparative market analysis. But part of the definition of value is what one person is willing to sell for and what another person is willing to purchase for.
Right.
So if that part of the definition is involved in an appraisal at all, then shouldn't we just be able to buy and sell without appraisals anyway?
Technically, but banks have that in place to where they are protecting their investment, right? So they have to have someone else, a third party, confirm what the market has said, what the realtor has said, and now it's what the appraiser has said. They have to confirm that. That's in place.
Ron Bokro says liquidity. It'll come down to liquidity. Marley Preston said Tim's wife is 100% fun and a nice one.
Mm-hmm.
Elizabeth Rodell says, I love Doomsday. She's looking forward to the conversation of the evening. Team Pone, it's already being hashtagged in the comments. And then Robert said appraisal just justifies the risk to the lender. That is all.
There you go. So, and Tom Tezak, by the way, how's Hawaii going?
Oh, yeah, there you go. Tom said, I think 4 months, I think in 4 months, all of our government agencies will be buried in paperwork that will be impossible to catch up with and rectify. My guess is it will be forgotten about.
I love that comment. That is good.
I would love that if that happened. A government that is unable to operate is a government that helps me succeed. Not libertarian, just kind of lean that way. All right, so
if things fell apart and things got out of the way and opened up, made it a little easier for what we do, I mean, that wouldn't be bad, would it, Ray? I mean,
it wouldn't be bad. A little bit of like look the other way while we can operate and get things done for the people that need them to get things done. It'd be good.
Just saying.
All right, so let's talk about REMAX. On Inman, REMAX says that they expand their broker fee, deferrals, and enacts a hiring freeze. We've been talking about some of that. We know that 41% of Redfin's employees were furloughed, on 7% of their employees were actually laid off. So this comes on the heels of some news like that. So let's go back to the article. The real estate franchisor is enacting cutting measures, including suspension of its popular 401k matching program, company bonuses, and nationwide hiring freeze. So with the housing market slowing in many areas, REMAX is allowing its franchises to defer or reduce fees for April and May. The company announced Tuesday. So that should put more money in the pockets of those franchisors or more money in the pockets of the agents, depending on how the franchisor actually wants to play that. At the same time, the national real estate franchisor is enacting a number of cost-cutting measures, including a hiring freeze and suspension of the company's 401k match and company bonuses. Which, okay, so right now, the stock market is at one of the all-time lows. I think it's a little higher today than it has been. It was down like 35% at its lowest. So it has come back and recovered. So they are pausing a 401k match. So if you were to give $1, they give $1, right? They're pausing the 401k match when the stock market itself is at its lowest, and you could use that match to buy more of the stock market if you so choose. So I think that's an interesting cut. That may not be my first cut if I had a worldwide multinational company and was looking to, maybe help my clients and help the realtors that look at this as a temporary situation. Right now, I'd be trying to max out and buy as much as possible, like max out right now for the whole year and get your year in right now, so that you get the match and you get stock, so that when the market recovers, it goes up more. That's just my 2 cents. Back to the article. Although we entered 2020 with momentum, the growing and rapidly evolving COVID-19 pandemic is increasingly impacting the worldwide housing market and our operations, REMAX CEO Adam Contos said, which we'd love to have you on the show, Adam, if you wanted to comment. Factors such as social distancing, governmental stay-at-home orders, variances in whether real estate is designated as essential services growing health and economic concerns are slowing the amount of home buying, selling, and borrowing activity that we typically point at a year. Franchises opt to defer 100% of the continuing franchise fee and advertising fees for April, May, or both with zero interest. They would still pay their broker fee at a regular time with additional 1% on top of the normal 1% broker fee. If the franchise defers both months, they would increase 3% until the deferred fees are paid. So there you go. It gives a little leeway for a REMAX franchise. I think a lot of franchises are going to go to something like this. I think it's a good idea to defer the payments in the interim. Let the company take a small hit while giving the franchisor more flexibility to maybe keep and retain agents, even in this time period to recruit agents. But that 401k hold, that's one thing that I'd be like, I don't know about that. Right now, you can buy the stock market on sale and get a match. That's a really good deal for someone that is a franchisee or an employee for REMAX. What would you say?
But my question would be, would they be buying the stocks right now? So if the company's still going to match with all the uncertainty, are people still going to, I'm just going to take the other side. Let me just play the devil's advocate. Are they still going to match? Would that even be, with all the uncertainty am I going to have a job, and a lot of agents, is there going to be business for me? Will they be putting that money into that, into the stocks, right? Will they be matching?
One of the questions is, who is REMAX wanting to keep? Their top producers, of course, right? The ones that are even to the downtime still producing, still helping the clients, and still maintaining some profit margin for the companies.
Right.
This stock program would be most advantageous for those that do have some savings and has a team and operates well and is lean and can operate through this time period to take advantage of it.
Sure.
I think there's going to be a lot of people that don't do the match anyway. And if they're not doing the match because of the time period, it doesn't impact REMAX because they have to match in order for it to match, right? So you have to have somebody willing to put the money in the market
and then match.
In order to have to pay for the match. So I think it's kind of a hit to those that are maybe the most successful within REMAX. And those would be the people that I would want to make most comfortable. So one day I hope to do this for our brokerage too, to where we can match and all that kind of stuff. But maybe it's also just for employees in general. And since they're furloughed, or maybe they're still paying employees, I'm not sure exactly what's happening in REMAX corporate, but it may be the corporate employees that are kind of impacted the most. I'm not sure how many franchisors or how many agents have the ability to take advantage of the match. I mean, you're a REMAX agent. Can you do the match?
No, I don't know. I don't take any part of any of that. I don't.
Okay.
Yeah. I don't,
Well,
so I can't.
that up to see if it's open to agents. If it's open to agents, that's one thing that I probably wouldn't let go of. If it's just the employees who a lot of them are having to be furloughed, or instead of furlough, hey, we want to keep you on so that you can function, but we're not going to give you free money. That's probably fair.
Right. So that's, again, on the other side of it. That's, so if it's, we're going to furlough you or match your 401k, which would you choose? And also my other question would be, could they say, hey, we're going to still keep this with the underlying sentiment being, we're just trying to help our top producers? You know, that may come out, you know, work its way out of the woodwork. So you wouldn't really want that. So, but there you go. I was waiting for Chris to comment. So
Malcolm kind of said the same thing. He said, that's lame. He said, now's the time to invest. Chris Murray says, I'm not aware of any match. This is news to me. So it may be just corporate employees then. Yeah,
it may. That's why, and that's what I was going to ask too. You know, they can't lay us off. I mean, we're realtors, so I would, if I were guessing, if I were, you know, crystal balling things, I would question, you know, those agents, because we have a smaller office. It's a team office, so there's 13 of us, and, you know, with everyone there. Chris, is it 13 total with front desk and TCs and all that? I don't know how many is total, but my question would be those big brokerages that have the 300 agents, you know, and how many of those are going to produce, Ray? 15. Yeah. So, like, quote unquote top producers. So my question would be those, because they have larger franchise fees, correct?
Yeah.
You know, so, and they have to, by the way, they have to keep their franchise at a certain number. So how are they finding to keep all these agents happy? So 13, Chris. So
yeah, Chris says 13.
So my question would be for them. How are they going to stay alive? How are they going to thrive right now? Because as we've said on the show a few times, a lot of agents are viewing this as a vacation, and they shouldn't be.
Exactly.
14 including employees. There you go. Hey, so T-Zac, he's got a good, Maui's empty.
There you go. He said, we really need tourists to show up. We sincerely will be dramatically and negatively affected, and this will most resort areas, just worse for island commute that require a plane flight to get there. Yeah,
so,
that's true.
So like Kauai right now, you fly somewhere and then fly to Kauai. So that's kind of what because that's my favorite island. I love Kauai.
Yeah, that's my favorite island too.
Oh my gosh, it's just the best. So, and these are things, by the way, I'm glad we have this reach on our show that is worldwide at this point. I'm not being cocky. I'm just saying, because we get to hear that kind of stuff. He's in Maui, and right now, I mean, no one's flying right now. So people aren't right now going, I'm going to go to Maui for my, you know, yearly vacation.
Or maybe they're saying that it's just all on hold right now. All the vacations are on hold right now.
Yeah. There you go. Chris has it.
Speaking of on hold.
Chimpanzee.
Wait, no, let's go to the next story, and then we can bring everybody on.
Oh, not chimpanzee yet. Sorry, guys. By the way, someone just joining the show is like, why does Dan keep yelling chimpanzee?
Why is he saying chimpanzee? I'm going to bring you up.
All right. Now, this one's a quick one. This one gets a little opinion-y and a little left attacking the right and right attacking the left. So I'm going to let you guys go there. It's on Yahoo Finance if you want to see it. I'm not going to get into that because that stuff drives me nuts when they fight, when these politicians fight over the money that we pay in with our taxes. They fight in what they're going to do with our money. It starts driving me nuts. So is the SBA loan already out of money? Now, the short answer is no, but it's getting close. The $349 billion program to help small businesses reeling from the COVID-19 outbreak could be exhausted by Thursday, a top White House advisor said, but negotiations in Congress to replenish it remain stalled. At the present rate, so they're not really stalled. They're going back and forth like they did on the first round, you know. Right side, I want this. Left side said, no, we want this. Let's come to, they'll get to a middle ground again. But right now they're currently, quote unquote, stalled. At the present run rate, we're going to run out of money. Larry Kudlow, President Donald Trump's chief economic advisor, I'm trying to say it wrong for Sampson, said Tuesday on Fox Business Network. As of midday Tuesday, almost 1.1 million applications totaling more than $257 billion had been approved since the Small Business Administration program launched April 3rd. And we had a lot of comments. Was this in I don't know if it was in Be More Contributors. By the way, if you're not a member of the contributors page, Be More Contributors with an exclamation point, go there. We've only denied 3 people, but they're all Russian operatives or ISIS, so you should be fine. I don't know, Ray, where this conversation was had, but we've had Be More Contributors talk about they applied for this and either haven't heard anything or they've been delayed and said, we'll try again in 2 weeks kind of thing. So Trump and the GOP want to add another $250 billion to the Paycheck Protection Program, but Democrats have been holding out to expand the stimulus to include aid for state and local governments and hospitals. So again, then on there, it just kind of denigrates into a whatever. It's kind of he said, she said to me, but if you want to see more, it's on Yahoo Finance.
Those it's from Bloomberg. It's I think it's originally on Bloomberg, and then
sorry, yeah,
put it out there. But one of the things that I thought was interesting in a discussion, and I want to bring up our guests in a minute, but they were talking about how a lot of the elective surgeries is what hospitals really use to make money.
Yeah,
and in this time period, a lot of them are not allowed to do the elective surgeries, even if they are not at full capacity, which has been hampering the way that a hospital makes money. And they can only do the COVID patients, and they're not making a lot of money from that. So you have hospitals that are busy and struggling, and there's whole departments of the hospital that are just kind of waiting. So I think a lot of the regulations will be loosened in the next couple of weeks in order for them to actually make money. But I thought that was a really interesting discussion. It was on the radio, and they were talking about as hospital administrator and one of the talk show hosts, just kind of talking about what the realities of hospital financing and budgets are like, and then how they make their money, and then what they will need to do to continue making money, and how they're going to have to reopen some of those areas economically, even though everyone's stay at home, shelter in place. They have to open up some of those elective surgeries so that they can make the money, so that they can pay the bills for the patients that they're not making any money on.
Yeah, on my live yesterday, I had I was just going live to check on people, and I had Jessica Bush come on, who is in Maryland, and then one of our contributors, Clayton, who has some good comments here. And he actually has a client who is a surgeon. Now, when you hear surgeon, you're like, oh, they make great money. Of course they can buy. But they're non-essential. They do non-essential surgeries. So the hospital, exactly what Ray was saying, they can't have them right now. So everything's on hold for them.
Okay, so we have a ton of topics to discuss. Are you ready to switch to the deep dive and bring in all of our guests?
Yeah, let's make some moves like a chimpanzee or something real quick. Just
all right, let's do this. I hit the microphone, so I'm interested to see if that's gonna make a sound later. Okay, here's everybody, all the chimpanzees. Tim Macy's asleep. Michelle Calkins is dancing, and Marley Presswood is enjoying her Maui thoughts.
I'm on vacation. All realtors are on vacation.
Day drinking, but that's nothing new for realtors.
By the way,
there you go. What are you drinking?
Way, this week's shade brought to you by.
Yeah, that's right.
Marley with some subtle shade. I like it.
I like it.
They're just
what are you drinking? What are you drinking there, Michelle?
Bloody Mary. It's almost gone.
All right, Michelle's got the Bloody Mary. I got a little mimosa. Tim, what are you having?
It's some water.
Oh, water
in my sippy cup.
What did you do at the happy hour, Tim? Marley, do you have anything?
I have some vodka water.
In her Nalgene.
I try to finish the whole thing by the end of the day, by the end of the work day.
So if you're on the group and if you're on the group and you have had a White Claw before, raise your hand. 1, 2, 3. Tim, have you had?
There's no laws. I'm drinking the claw.
I think I have.
I'm
pretty sure I had one.
Yeah, Tim. No, you have.
I like Truly.
I had one this summer.
So does anyone like the Truly or Bonavie or something like that better?
Yeah, that one's really good because it's like elderberry flower. It's nice.
Nice.
It's very millennial.
So Dan has never ever had White Claw, and so this is going to be his first.
By the way, I was fine with never having. I was just okay with it. It wasn't a thing.
Then what happened? What was the change?
Huh?
What happened? What was the change that you said, oh, I'm going to have this. I'm going to try this.
Well, we had all these fun guests coming on, and Ray, if you haven't watched is it the last 2 shows? No. We didn't do any day drinking with the CCO on.
No, it was with the one with Christoph Chu. We tried the Corona, and the one before that we just did Corona. But then we tried the Corona Claw, is what I call it. It's the seltzer.
I didn't
was getting with the claw. They're pretty terrible. Pete Thorpe said, but how many of you have done the show while drinking the claw? It's good. I have.
Yeah.
This is a long show, Tim says. Thanks, Tim. Thanks for the valuable contribution to the comment section, Tim.
I love the next one. Oh boy, here goes the show.
I think I've commented more than I've talked.
There you go.
That's what we set out to do. We didn't tell you that, Tim, but that's what our goal was.
We actually didn't want you on the show. We wanted you in the comment section, bro.
I love it. I love it.
The whole show.
Well,
I get no Google juice when Tim is on the show, but I get all of it when he comments.
Yeah, well, we can't get him to comment normally, so we're like, let's have him on the show. He'll comment.
On the show, then he'll comment. Yeah.
Yeah.
All right, Dan. Why don't you try one of the flavors? I think you should probably start with the lemon lime. If you have the lemon lime.
Okay, so I bought the variety pack. So there's ruby grapefruit.
Ruby grapefruit is terrible in my opinion.
No,
There's black
You like
cherry.
it? Black cherry's good.
Yeah.
Yeah, that's a really good one.
There's raspberry.
Raspberry's good.
Raspberry, and then there's the one Ray. So should I start with this one, the natural lime?
I would do either natural lime or blackberry.
I feel like the lime is the one that's always left in the cooler. No one drinks that one.
I think the grapefruit is the way.
I mean, I like the lime and the lemon, but
So what are we doing? Which one am I going here?
I would say lime or blackberry is what I would say.
Raspberry.
White Claw is gonna be like, hey, can we get these guys all the time? Yeah.
So I would say raspberry or black cherry.
Yeah, pick one of those.
Okay,
Blackberry.
raspberry.
Oh, okay.
Raspberry. All
Raspberry.
right, here we go. I'm going to put you on the big screen so we can all watch you taste your first claw, sir. Here it is. D. Ludwood Rocks. You can follow him at D. Ludwood Rocks, wherever good D. Ludwoods are sold.
Yeah. Go follow me where I'm going to try more stupid beverages that I am currently at this point just making pointless videos. I don't know if you guys have seen. Did you see my guitar one the other day? My cover. I just anyway. All right, let's try it. Oh. No, it's fucking horrible. And I don't like to say bad words on the show, but this is not good.
Oh, I'll have to bleep that one later. You don't like it?
Okay.
It's getting better.
See, it's getting better. This is what happens. The first time I tasted it, I was like, I don't know. It tastes like TV static. But then I started drinking. I was like, oh, it's pretty good, actually.
when I drink it, I always feel like I'm instantly getting a 6-pack.
That's what happens. It's very low cal.
What?
I'm getting skinny.
I do. I feel like
That's the secret? Is White Claw?
Yeah, you
Yes.
feel.
Whoa.
You don't look skinnier. You just feel skinnier.
Oh, feel
my-
skinnier. Okay.
My top abs are already coming in. Just 2 sips. My lower abs are the tough one to get seen. I mean,
Yeah.
Malcolm is building up our esteem. He says, look at those rock stars. David Bonus says, hi, Michelle. Melissa Mars says, Ben's getting with the claw. Love it.
it's really seltzer. So I'm really surprised how seltzery this is. It just tastes like bubbles.
Yeah.
So
Yeah.
what do you call it, Michelle? Don't you call it something? Or Ray said TV static. It tastes like I'm eating like packing peanuts. Like it's
What?
I wanted way more flavor out of these things.
It's like LaCroix. There's no real flavor. It's just a smell.
No,
Yeah.
but
Is it
LaCroix
LaCroix
has LaCroix.
LaCroix.
Wow.
Sorry,
It
I'm
has
trying.
a little bit of more bite to it though. So the good news is I don't taste the alcohol at all. That's cool. So I can just pound these
them.
things and get sick
we're
back
really
out.
thinking like beach, lake, like it's a lake drink for me. Like
Yes.
out of the boat, I drink like, a ton of them. It's hot.
Yeah, it's not a quarantine drink.
Yeah.
No.
Well, actually, it's a great like quarantine breakfast.
Yeah.
Yeah.
So, right, it's got to be really good or it's horrible.
Got to be really cold. Yeah.
Oh, cold or it's horrible. Robert Sampson said, I don't drink beer, keto, so it's either high proof bourbon or spiked seltzers for me. I've been pretty ham town off of White Claws.
You can also add vodka to the White Claw and make
That's
it a
what I
vodka.
was going to say. It
Yeah.
tastes like I'm drinking a.
You have to drink that many. That's what's so good about them. You can just drink them all day because they're.
All day. And then you
But-
don't drink water because you feel like you're drinking water. So then you just become very drunk.
hydrated.
That's what I'm hoping for. And then that's why this is going to get better. Because right now, I don't understand why people like these at all.
I think it's just
So
a low
picture
calorie.
yourself- Go ahead.
Are you going to try another one? Or are you going to drink the whole thing, then try another one?
I'm going to pound this and then go to another one.
Yeah, do a different flavor. See what comes out.
Yeah. So
Okay, so while Dan pounds the claw, cheers,
there's
everyone.
no
By the
law
way,
with the claw. I like that part.
welcome to Happy Hour.
Yeah.
Cheers.
Yeah.
Okay,
By
so
the way, we've officially transferred to the happy hour portion of the program.
the Happy Hour deep dive portion of the show. We've talked about a lot of articles. Let me summarize some of the articles that we've already talked about. Talked about the SBA loan running out of money. We talked about the mortgage applications are high, but that's just due to the refinance, that the actual mortgage applications to purchase are low by 35% compared to last year, which raise your hand if you're shocked. The mortgage forbearance jumped, and then Chase requires 700 FICO. Chase is one of the larger lending institutions in the country. I think that's kind of about it. We brought you in already on the 120 days after the mortgage closes appraisal, which is kind of a weird thing. So I want to get your opinions on some of those earlier articles and kind of what all this means for real estate agents as a whole. As if you're an agent out there, which all of you are, if you're an agent out there and you're looking at the situation in your own town and community, two questions: what's going to happen in the future, and how long is it going to take? And then the second question is, what should you do now as an agent to prepare for what is going to happen and what's going to come out of this on the back end?
Yeah.
Who's going first?
Go ahead. You mentioned something.
Let's
Okay.
do age before beauty. So Tim, go.
Wait, am I the oldest? I'm not the oldest.
Yeah.
Yeah, for sure.
By far.
Okay.
Yeah, how old-
I'm like 33.
Oh
Yeah,
my
totally.
God.
Hey, that's
Yeah.
not old. Anyway,
Old
like
man.
I got the whole screen. I got the rainbow. I better get rolling.
Right.
So one thing I think is that people are looking for a realist. So be a realist. Don't be like the crazy optimist who thinks it's all rainbows and butterflies, and don't be the doom and gloom person either. Be somewhere in the middle. One thing you said early on was about the stats and the headlining grabbing stats and the fact that forbearance is up 1,300%. You could also look at what percentage of mortgages have gone into forbearance. And I'm sure it's a very low number. And when you consider the fact that so much of the country's unemployed, I bet that low number is actually a better looking number, right? So let's not get sucked into the headlines.
3.4% or something.
Of all mortgages?
Yeah.
Okay. I don't know. That sounds high. Never mind. That doesn't sound like a great number.
It's better than 1,300%.
Yeah, you know what I mean. Like,
Yes.
they grab these crazy stats, and so
Right.
like picking apart the stats is a good thing to do. One thing I will say though is that I believe in a lot of our more neutral markets, it will swing to a buyer's market. And when you look at unemployment, I don't know how much that employment's going to come back. Like, it's not all just going to magically come back 3 weeks from now. And when you look at increased restrictions on buying, right? We need to have better buyers. We're going to have less buyers. I don't see how this doesn't swing pretty good to a buyer's market. And as agents, one, I think we should be educating our people on what could happen. And then two, we need to obviously be preparing for that. And so whatever you think you need to do, if the market's going to change to a buyer's market, then you should be doing that.
So you feel like it's going to go buyer's market at the end of this, even though all the lending institutions are tightening their lending requirements, raising pre-approvals to 700. Do you feel like that's going to be eased in the future?
No, I mean, when you look at the racket that is the mortgage industry, right? Like loan officers, servicers, investors, mortgage-backed securities, hedge funds, right? Like this whole thing has definitely poked at that crazy system, right? And I think that if forbearance and foreclosure and all that stuff goes up, they're not gonna bring down requirements, because don't get me wrong, loan officers would love to put people into houses at those, credit rates and everything else. I mean, how many people have we put into houses in the last couple of years that were like borderline buyers, maxed out on their budget? Like that is going to change over the next couple of years. And I don't think they're going to come right back to, lower credit scores and all that fun stuff.
I don't feel for me personally, and the buyers I work with, I feel like it's much better than it was in 2007, 8, 9. Even through that crash, you still had people that were able to purchase until about 2008. You still had people that were about to purchase no doc stated income loans, right? So because that is not in the market any longer, I feel like it's going to be a better situation at the back end for buyers. And currently, if you're pre-approved to buy a home right now, you're like one of the strongest buyers in the marketplace.
But I just foresee the buyer market shrinking, getting smaller, and then foreclosures and everything else making it so there's more inventory, which will obviously push it.
An inventory issue there?
Yeah, I mean, so in Dan's favorite neighborhood of Dignity, right, is like one of our up and coming downtown neighborhoods. There's 47 active listings, right? 47 active listings. And zero of them
out of 100 houses.
Well, but what I was saying, 47 active listings, zero of them have gone under contract in the last week or two.
Oh, wow.
So they're sitting. That's where it's leaning towards the. So for the buyers who are pre-approved right now, that's a little buyer's market, right?
Well, yeah, zero of those 47 houses have gone under contract in the last, week or two.
And then, like Marley said earlier, essentially, if you don't like anything that's on the market right now, you're not going to see anything new.
And on top of that, we're talking about Airbnbs. Like, I don't know how much longer that's going to hurt Airbnbs for. You're going to have a lot of Airbnb owners that are going to be putting their houses on the market. Yeah. A lot of this stuff, there's landlords right now that aren't getting rent payments. What do you think they're thinking about? They're thinking about selling. Yeah. There's a ton. I think there's going to be an increase of inventory for sure.
I agree. The Airbnb thing for me is a big deal. Like, you figure the people bought this income to help them. Now they're not getting that income. Panic sets out. I've already had a few people that are like, I think I'm gonna have to sell this. And I'm like, I mean, okay, I can't tell them no, but I agree. I think it's, I think we're going to see that flip where people will go into panic. We'll have maybe lost too much money and just can't recover, or have to pay debt off or something from all this. And so, for me, the second home market, typically we're the first to get hit, the last to recover, because it's not a necessity to have a second home, but our inventory should maybe spike up here.
So now think about that though. So like when this is all like, we get the all clear. Okay, we have a cure, we have a vaccine, you can go out again. For that Airbnb and investment property market, people aren't going to just go, oh, cool, everything's fine, I'm going to get an Airbnb tomorrow. They're going to sit and kind of, poke their heads out, right? Like a groundhog, and go, well, I'm going to wait. Like, it's not going to come back immediately. Don't you guys think it's going to take, by the way, I love saying super serious things with buddy your son. But don't you think it's going to take that market a little bit longer to recover, just the kind of people getting out and about again?
Still the same thing. Yeah. Because people aren't, again, everyone's going to be saving their pennies. So it's not like everyone's going to run on a vacation right now, because people don't have jobs. So there's no income coming in. So absolutely. Again, so the vacation market it will be hit continually. It's going to be a domino effect for us. And that's where people will panic and they'll put their house on the market.
Yeah. Okay. I'm going to play devil's advocate here, because you said, because people don't have jobs, they're not going to go on vacation. I think most of the people that were going on vacation would still retain their job. They just can't travel right now.
Right.
So I would argue that probably the bottom 1/3 of the market that is not actually vacationing a lot anyway. Those folks are going to be having to find another job. The non-essential employees that companies look at this as a nice opportunity to get rid of some folks that they've been meaning to get rid of for a while. They're not going to have a job. But once everything recovers, I feel like a lot of the people that were planning on vacations, thinking about vacations, they're just going to move their vacation time. And if they're planning on this year taking a vacation and they still want to take a vacation this year, I think Airbnbs are going to be busier than ever because you're going to have, a year's worth of vacations crammed into 6 months.
Yeah, but you're assuming that like they're just going to open up one day and it's going to be like you can now take vacation.
Right.
There could be a very gradual thing, right? Like we were supposed to go to Disney World. Well, we're rescheduling for December. Our parents were going to come see us, but I don't know if my parents are going to feel comfortable traveling for the next 2 years, right? So, I don't know what kind of restrictions are going to be in place for travel. And if, like we're going to go, sure. But is everybody going to get right back out there? Right. I don't know.
I would say you're right. I am assuming that once everything's roses and we can all go outside again, that it's a non-restrictive. But you may be right that there's a lot of people that were thinking about vacationing that are high risk. And those folks are probably going to stay put. So you may have fewer. But I just don't see it being a dire straits issue for Airbnbs if they can hold on through this time period. I think what you have is a lot of accidental landlords that kept their place and moved anyway and have been Airbnb-ing it out or renting it out or have been okay. And now they're getting a call from the renter saying, I can't pay you. Those are situations that are going to add to the inventory in spades, which has been a huge issue, which Dan and I have talked about for a year and a half, 2 years. Inventory has been a huge issue in the marketplace. And if it continues to be an issue, that should relieve that issue and allow more properties for people to buy. But then what Tim was saying, you may have fewer people that can buy. And so you might have a situation in which supply is increasing, but they're all kind of like going the same direction, right? Because it's when they go opposite directions that either the price spikes or it plummets. But when they go the same direction, both supply goes down and the number of buyers go down, or supply goes up and the number of buyers go up. That's when everything kind of just remains stable. And we see those ads or the headlines that say home price gains slow. That's like super confusing for us to talk about. The home prices are still gaining, but they're slowing. We may see them slow further. I don't foresee a future, and I could be wrong. And Marley, you can correct me if I'm wrong, but because I think our market's kind of similar in what we were talking about earlier, that there's a 20% decline in available inventory. I don't think you're going to see like a huge crash in home prices. I don't think you're going to see a whole bunch of properties for sale, although people are trying it. But what do you see happening in your marketplace?
So I don't know if y'all know, but Charleston is a huge place for the Northerners to come to. So my prediction of what's going to be happening is, I think that some people that have investment properties that are renting it, they'll probably throw this on the market because no one's paying their rent right now. But my prediction is that we will have everyone's holding out, and then we're going to have a huge influx of inventory. But then a bunch of Northerners are going to come down to Charleston and finally make their move here. So I think we're going to have a lot more qualified buyers. I agree with Tim that it's going to be harder for buyers to buy. So I think that
don't agree with Tim. He gets a big head. Don't agree with Tim.
I just do. I mean, I want stronger buyers. We don't need those buyers that have 500 credit scores.
Well, they're pre-approved for 200,000 and they look for properties at 210,000. It's like,
but I'm very interested in Charleston too.
Well, and
but we don't have too many restrictions on them.
Comment.
We have a couple of good comments. Ryan Bokros says that on the Gulf Coast, we're seeing a lot of Airbnb hosts offer up and trying longer rental terms.
Seen that really good option to keep your house too, because if you can, at least just get somebody in for a year. Because everyone needs a house, they're always going to need a house. So if you can at least get somebody in for a year to help pay your mortgage, then that's helpful for you, the owner of the home, and you don't have to dump your house. I was going to say too, like obviously people still have money that have always had money and they will vacation, but the number of vacationers I do think will be down.
I think that's true.
What do y'all think about everyone's working remote right now? Do you feel like a lot of people's jobs are just going to move remote after this?
Yeah. Absolutely.
I do too. I hope they move to Charleston.
So this is all stuff that I think
jobs and move to Charleston. So
Say
a
that
lot
one
of
more
them
time.
work.
So
a lot of
it-
people in Charleston.
I think
A lot of people in
she's trying to
Marley,
recruit everybody
not
in
Tim.
Charleston.
Not Tim.
I like it.
Marley. Say
Let's
that
all
again.
move to
Marley.
Charleston.
a lot of people, when they move to Charleston, they're working remote for a job. I don't know, usually in like Boston or New York, so they get paid way more than they get paid here. So they find remote jobs and then move to Charleston. So I think that a lot.
So I have
of
a
people-
friend
everyone-
they live in Charleston and they work in North Carolina, but
they work in New York, but
They-
they work
no, I have friends that live they live in South Carolina, but they don't physically go to the office. They technically work in North Carolina, but they live because it was cheaper to buy in South Carolina.
Yeah, our taxes are really low here too compared to a lot of other places.
Mm-hmm.
Couple of good comments I'm going to get to. Then I want to get to Tim's comment. He said, Tom Tezak said, I think opportunity in the short term, but the market will escalate in the fourth quarter. I was just watching CNN this morning, or CNBC, I mean, and they're talking about a potential escalation in real estate, also in the market recovering at a V shape. There's a lot of people that are predicting a V shape. Goldman Sachs is one that's predicting a V shaped recovery instead of a long U shaped recovery. But they were predicting a third quarter recovery as far as that goes. So I could see that correlating with the fourth quarter recovery in real estate. Tom goes on to say that the new ease of telecommuting will help resort markets in the long term. So a subtle ad out there for Maui. If you can commute to work through your computer, then why not live in Hawaii, right?
Why not?
Why not? I've thought about it a few times.
Yeah.
Why
it's
aren't you
pretty
doing
nice.
that now? You should have already been there with Tom hanging out, working
I
somewhere.
tried. I actually started looking at tickets, and then they started telling us we couldn't travel. I'm like, where can I go?
Yeah.
Our IFA lives in Costa Rica, so I was like, this is perfect. I'll just go to Costa Rica, work in their house.
Oh, there's this couple. They did an article on this couple that was stuck on an island in the Maldives.
Yeah.
Anyway,
Yeah.
it's a really good article. If you look it up, it's really interesting. They were the last to leave the island, and they talk about how it's going to send them into financial ruin because it's like so expensive to stay on the island and buy stuff while they're on the island. But literally, they were the last two to leave the island. They finally got off. So look up that article. Tim, what were you saying about all this stuff? Both the telecommunicating and then kind of what the market's going to do as we recover.
So as the
We don't agree.
Yeah, I know. So as the exp agent here, I think it's just there's a lot of brick and mortar that's unnecessary that is going to go away. But I also think this isn't necessary. I mean, I think it's creating some new things, but I think what it's doing is pushing forward things that were slowly happening, right? Like movie theaters were like slowly declining as like less people went to movie theaters. I think it's going to accelerate that big time, right? Like more movies are going to come.
Movies same
Straight.
day they're out, right?
Yeah. And so it's going to accelerate that. I've been big on the fact that like you have these giant, ridiculously expensive colleges when people can learn online. Like it doesn't make any sense. I think it's going to accelerate that. And so I think all of that stuff will be accelerated over time, and you kind of have to figure out where your win is. But what Marley was saying, like especially about the Northeast, like I'm from the Northeast, and the economy there, like it seems to me like it's teetering, and anything like this can just kind of knock it off. I think you're going to see a mass exodus from certain places like New York City. Like think about the amount of people that are stuck in an apartment or a condo in New York City that are like, forget this, I'm out of here, I'm moving to the suburbs, like I've been thinking about doing for the last however many years. Like condos, I think people are going to sell their condos. And there's been this urban revitalization over the last couple of years in these major cities. And I think not a major deal because we're Americans, we have the shortest memory in all the world, right? Like 2 years from now, we're going to totally forget it. We're going to totally go back to what we were doing. But in the short term, I think you're going to see condos and some of these other things people scattering from.
Yeah. And I mean, what about that? And by the way, then I want to get to the next really important question. What flavor do I try next? Pounded the other one, by the way. And had to mute my microphone.
I need to put up a comment from Mike Elizabeth Rodell. She said, tastes terrible, drinks the whole thing.
Well, I'm doing it for the show.
Just for the show.
Yeah.
You should shotgun one of them. Do you know how to do that, or are you too
I could do that.
Are you too old?
What did she say? Am I too what?
Girl, you probably invented it.
Yeah, by the way, I'm 46. I probably invented it.
Probably. You probably did. You're right.
Yeah. So I've been shotgunning things since before you were born, young one. I'm just kidding. Love you.
That's probably true.
So I'm much older than Tim Macy, although we look the physical. But Tim is a baby-faced man, but with that beard, man, it's adding.
It's looking good.
Some year. I think
So
you keep it.
we have
So
a couple
wait, I
more.
gotta go back to my question.
Robert Sampson said, does this kill shared workspace model completely? Which WeWork has missed a couple of rent payments. That was a news story that we did not cover. And then Tom Tezak says commercial real estate is going to be impacted negatively for a long time. Also wanted to get to a comment that Tim made before we get to the next flavor that you taste. And Tim was talking about how this is going to negatively impact some areas that are now shelter in place because of the population density. It could also positively impact some areas. Like, I don't know if there was a state that's not completely locked down and all the other sister
Arkansas.
Oh, yeah, that's a great point, Tim. Like Arkansas, there's a cool state. Arkansas is not locked down and doesn't have.
Wait, where are you?
I happen to be in Arkansas.
Okay,
not only that,
in my office because we are not locked down or shut down, which is kind of cool, right? Because living
not
in
only
Arkansas
that,
is social distancing.
I want to move to like the country where there is nobody and it's just like crazy, ready for the apocalypse area. First thing that comes to mind, Arkansas.
Arkansas. There you go. Let's go.
Yeah.
All of you move here at once because that would defeat the purpose. So Dan, back to what's actually important in this show. What's the next flavor?
Well, that's what I want to. I'm going to let you guys pick either the comments or you guys. So lime, ruby grapefruit, or the black cherry. I'm not. You guys.
Blackberry's gonna. It's a lot like the one that you just had.
I say lime and grapefruit's. Somebody said
I say
it.
lime. I agree with Michelle. I do not like the grapefruit. I would say lime. I would say go lime. It's going to be a brighter flavor. And if you had to pick one to shotgun, I'd pick the grapefruit or the blackberry.
I'll shotgun that one later. Okay, so but I do have a real question while I open this. That was a good pop.
Good sound.
That was much.
I'm thirsty now.
That was much better than the raspberry. So,
oh God.
Now think about this question. So as I tip this in 1 second, I'm building the suspense. Boker said lime, so good job. What is this going to do for agents that have been kind of how Tim said they've been holding off on going virtual and working from home and grabbing on and holding on and embracing technology? What is going to happen to those agents? Because now we're being forced into it. So if you weren't ready for this, you're getting slapped right now. And then I'll sip this. So, I want to think with that.
Wait, I want to put you on the big screen so I can get this.
Dude, this is much better.
Now
I'm hammered because of the first one. I pounded the first one. So take that into account.
No, it would take much longer for
You're
the
hammered off
impact of that first one.
One White Claw.
I'm hammered off of one White Claw.
That's a big
sound like me.
Well, by the way, when Tim was full screen, I snuck off and took a shot of whiskey. So
Nice.
no, but honestly, now take into account I have had one of these and they get better, as Ray says, but this one starts much better. There was zero flavor. I just tasted all the bubbles on the other one. This one's much better. I taste the lime, less bubbly, and then the aftertaste. The aftertaste on the first one was horrible. This one's better.
Let me couch Dan's question with another comment. If you listen to Story Brand podcast by Donald Miller, very, very good podcast. And one of the things that they talked about on the episode, one of the recent episodes called Checklist, is how they changed their organization during this time, because their organization is built on conferences. And right now conferences are not allowed. So what do you do? And they kind of talked about the thought process through that. But one of the comments he made that I thought was a pretty strong comment was that this is a forced evolution. We are evolving 10 years into the future in 1 year, is what he said. So for me personally, I was like, well, it wouldn't hurt to have some extra, monopods around for 360 imaging. It wouldn't hurt to have some of the extra things around for this. So I get online and I order a couple of them, and then I get a notice that it's back ordered, but it wasn't showing back ordered on the site. Like, well, no problem. I'll just order a different version. So I just ordered a different version, got a notice, back ordered. So I think a lot of real estate agents are trying to figure this out off the cuff. I think because why else would you need a monopod 360 camera? right? Or 360 tripod for your camera. That's for real estate. So there's a ton of real estate agents out there that are upping their virtual game. So for you guys, Michelle and Marley specifically, since Tim's the one that kind of brought up the question, how is this altering how you do work and what you do, or have you guys already done all this kind of stuff in the past?
By the way, Tim's contract was only for 60 minutes, so we do apologize, Tim. But I'll send you a bunch of all these White Claws that I don't drink. I'll send them to you.
All right.
Contact your agent, which is your wife, Tim.
Yeah, your wife loves them, so.
That's true. It's true.
You're stuck, buddy. So sorry, guys. Go ahead.
I feel like I know you guys so much more now since being quarantined that y'all are doing stories more. So I really think I know your whole family.
That's like heartfelt. It's a little creepy. Mostly it's great, but it's just that little.
The best stuff is when Tim's shooting a super serious episode. Like, here's a market update or some good news or whatever, whatever he's shooting. But then Pon goes back and takes the picture, and it's Tim, and then the here, and he's wearing shorts, and the kids' toys are everywhere, and she's it's brilliant. I love it.
Good stuff.
You want to start with this, Marley?
I don't actually remember the question.
Oh, different.
That's even better. So the question is about the changes in the space as agents. Whenever you see a ton of people that are buying all these monopods, tripods, 360 cameras, all that kind of stuff, is this changing what you've done for your clients in the past, or have you always kind of served them the same way?
I haven't had to change very much. We've always done 360, and we have a photographer that does all of that stuff already. And then also we have a lot of military that buy sight unseen. So I'm so used to FaceTiming and making videos for them to see what houses look like. So nothing really has changed besides the fact that I'm very lonely. I do like to be in the office with high energy. I'm pretty competitive, so I like to compete with the boys in the office. And that part's very sad. So now we just harass each other through text messages trying to see who is going to get the most clients. But that's the only thing that's changed.
What about you, Michelle? And then I have a question for Marley after your answer.
I'm not even here. Yeah.
I don't do 360. I'm not big on it. I definitely have been doing way more video. I do a ton of video anyways, but now it's giving me the opportunity to showcase houses, and that's building a whole different audience. And I've been like doing my own goofball videos where I've been like making drinks, and then one of them was I gave like a tour of my own house. That was like fun, and it just people are like engaged in a different way. So yeah. I like
doing video stories already that give valuable information out there. So a lot of, and correct me if I'm wrong, but a lot of the video you do is actually on your stories, to where you're updating people at the moment, like, hey, here's what's going on in the marketplace. Here's what's going on in our marketplace. Oops, I'm getting a FaceTime call as we're talking. But you're basically saying, like, with your stories, you're doing a ton of the video. But do you have like the 360 gear and all that stuff? Or are you going to try to buy it now that all this is happened, or you having more success with videos as a whole?
No, I don't feel the need to buy the 360. I can get it done, but I think some people go on and do video, and you're just like, stop. And then other
Tim
people
and I talked about being a member of the RETV group, which if you don't know about the RETV group, you got to check it out. It's RE Space TV. It's a whole group dedicated to real estate TV, real estate video. And one of the things I mentioned to Tim is, what if we've created a monster? What if there are agents out there that should be really good bloggers that are suddenly doing a lot of video, and you look at it and go, "Ooh, wow, that would be a much better blog post."
Well, here,
we try to encourage everybody, but some people it's just like, maybe not, maybe not for you.
So we're all
maybe write a blog.
Of course. I try to make it fun, and then I have a tripod. I have a ton of cameras. I've got the ring light here, and I've always had this equipment. So what's great is I've never used it more than now. So definitely all the technology that I have had and have invested in is coming into play now. So it's nice to be able to have a tripod, go into a house, give the perspective, like as me and the person, because in a 360 video, you still don't get the perspective of the house. So I like to set the tripod down, back up, and I'm like, see, this is how big the room is. And then I'll go through the video, and it gives people that orientation where through pictures, I guess like the 360 is you're like, whenever they walk into the front door, they can't tell what goes left and what goes right. And so to be able to pan that, people go, oh, like, thank you. So that's, yeah.
So Tim, and I already know what Tim does because I'm a Tim Macy of the Tim Macy Show #whiteboxing fan. But if you're not a Tim Macy of the Tim Macy Show #whiteboxing fan, you should look him up. Basically, Tim has a really cool 360 video that he released just recently. And it's with him kind of going through a house, but it has his perspective, and you see kind of the 360 tour going on behind him, which is really cool.
It is a little different. It's cool.
It's a cool and effective ad, I would say. So, but you've already been doing the 360 stuff too, right, Tim?
Not really. So we didn't do a lot of 360 before this because sometimes I worry about how 360 communicates the house, right? Like sometimes it doesn't look that great. I'd rather people come see it in person. But with everything going on, obviously, I think it's super important because, you know, people want the options to be able to see more from their couch. And so we also are playing around with these cardboard VR headsets where you can drop your phone in and then you can like look at the house in VR with one of these. But the big thing that we're doing and the big thing that we're telling our agents is that I think all of us that are on here kind of have a persona with their sphere, right? Like whether you're the realtor that's in the bathtub or you're the one that rocks or, you know, you're the one with the beard, like we all have a thing that I think our sphere and our clients view us with. And what I think we need to make sure we're doing as agents is make sure our clients know that we're the agents that are figuring it out. We're the agents that are being innovative. We're the agents that are figuring out solutions to all of the problems that this is bringing. And so, sure, like you're using gloves, you're sanitizing everything before you're doing the showing, you're doing all that stuff. Well, I think we as agents need to make sure we tell people that we're doing this stuff so they know, oh man, look at all the stuff that they're doing. They're still making it happen even with all this stuff going on and they're doing it the right way. I think, because honestly, how many people will use this? I don't know. It's a little wacky, you know what I mean? But the fact that we're doing it shows more than actually using it. Does that make sense?
It's part of what Don Miller said, which is the 10 years of evolution crammed into 1 year. It's not going to be perfect. We as a company avoided 360 tours until they could at least get 1080p, because one of the things that we hated was doing a 360 tour, but it looked like Nintendo, right?
Yeah.
It was like Turtle and
It looked like Roblox.
Right. But now it's much more, you know, even though some of them are 4K, some of them are 1080, some of them are 720, but even once you go down to 720 or 480, it's still better quality than it used to be. So we have adopted a tact where we will take a little less quality in order for the convenience for the client to see the home without being there in person. But here's a follow-up question that I think a lot of agents are wondering, and I've seen a lot of agents promote like what they're doing. They show up in like a mask and gloves and all this stuff. How do you show that to a client without the client being concerned? Like, how do you show like this is what we're doing, gloves, mask, everything, without the client freaking out and going, "Oh my gosh, I'm just going to."
So we don't even have the client in the house. I mean, most of the time we're gloves, whatever, doing the thing. We're taking a bunch of video of the house. So we'll go do 5 or 6 houses, do videos. We'll upload them into a video album, and then we'll send the client those 6 or 7 houses, and then they'll say, you know what, that one looks really good. We want to see it in person. And then we'll show them 1 house instead of 6. It's kind of how we're limiting our exposure. And with that, I love all you guys, but
all right, you got to go.
Got to go.
I've heard your background already. So we will.
All right.
See you later. All right. So Michelle, what were you saying? Is that also what you do?
Yeah, I mean that's just my first option is like, hey, if you're in need, first of all, like, because I've been talking about this the last couple of days, is California rolled out, you know, these COVID-19 forms, and as we know, most agents are completely clueless about these forms, have no idea what they're talking about. They're like, you need a mask. I'm like, have you been living under a rock? Like, it's been at least 30 days here. So to eliminate like the traffic and just too much going on, it's like, okay, look, I'll go preview the house, do all the video. If you give it a thumbs up, and like exactly what Tim said, like if it's something that like 2 out of 10, you're like, I definitely need to see these 2, then we set it up, because it's a lot less paperwork. It's a lot less traction in the house, and it just eliminates a lot. So yeah.
And Marley, how about you?
So if you haven't noticed my story, I feel weird posting that I'm inside houses because I feel like even if I drive outside of my house, I start getting haters on social media.
Wow.
So
You're in a community that's completely locked down, right?
we are on lockdown, but we are still viewing houses. And for the most part, I'm still seeing my clients. We're just, keeping our distance, wearing our gloves, wearing masks if we feel like we need to in that house. But we're only really seeing vacant houses.
Yeah.
But I like the idea of going and do videos, but then I would have to go look at that house twice if I did. So I've been just getting my clients to really narrow down. I'm like, do you really want these 8 houses? Like, which ones do you know that you're not going to put an offer in? So we're lowering how many houses we see. But still seeing houses, just not posting the fact that I'm still looking at houses, which I probably should, so people know that we're still actively looking at houses, but the haters are just out there hounding me.
I mean,
so
they're
we
going
have
to be there no
really
matter
good
what,
comment.
though.
Say that again, Dan. Sorry, I was talking over you.
The haters are going to be there no matter what. I mean,
I took a picture of a tree and someone's like, why are you outside your house? And I'm like, we can't do this.
yeah, you're like, I'm not. I just can't.
Did you guys see the guy that was paddleboarding in the ocean and like the Coast Guard came on the corner and like arrested him? No, the only time this guy was actually around people was when the Coast Guard approached him. But anyway.
Right. He was fine until they boated up to him.
That's right. Here's a good comment from Brad Daniels. He said, the problem with 360 is you can't just load the video and expect the viewer to get it. It requires training on the viewer as well to know how to get the most out of the video. I would agree with that in the context of the video, but if you can upload it to a platform like Matterport or some of those other platforms, then I think it's pretty intuitive for the user to scroll around and look for like the next place to click, right? At like highlights, and they can click and go through. As far as 360 video goes, there is a lot of user training that needs to be done, I think, before that 360 video is appropriate. So I would even make the argument that 360 photos loaded into a platform that allows someone to take the tour of the home is far more effective than currently a 360 video in which they have to go to YouTube and figure out how to use the video or go to a different service app, figure out how to use that video. I would agree with them that the video side of 360 is probably not there yet. But the photo side, I think, is there. And you could even use now a 360 photo on Facebook as a teaser for an ad, and people could kind of see this photo and they could kind of go through it, and you can say, for the full tour, click here. Then they could click there and take the whole tour. So that's, if I was a real estate agent, which I am, that's probably the tact I would take to advertise a house that I had a full 360 tour for. Howard said that the Nano 360 camera phone is this good solution. He said insta360.com is a good place to get it.
Yeah, so we 100% without exception do Matterport on every single listing. So it's always there. But what I do think it does is during these times or any other times, what it does is it eliminates. So if someone goes in and they're like, because if you click through, sometimes it's a little tough to see the flow, quote unquote, of the home, right? So if you see individual pictures, you're like, no, I like these individual pictures. I like these individual rooms. But then you go to the 360 tour and then you can kind of see the flow and like, oh, wait, right when you walk in the door, that's the kitchen. Okay, so it would eliminate that buyer if they don't want that. So I think it does increase or help, especially with what's going on, buyers that are serious about it, then they can physically set up to see a showing. And then I think it would be beneficial, like Ray says, if you want a 3D 360 video, then we'll take you to the next level. We'll go here. But my question, again, goes back to, what about all these agents that have never done a 360, never done a Matterport? They take 5 pictures with their iPhone, and they're all horrible, and they're not of any important part of the house. What is that effect going to do? Because they can't catch up, Ray. They cannot order these things and get these things in place right now. They just can't. They cannot.
They're the ones awaiting the stand and the 360 camera on back order. And then by the time they have it there and figure out how to use it, this whole thing probably will be over.
Right.
But hopefully it'll push our industry as a whole forward. And the agents that have those tools will start to use them for all of their clients, which they should have been doing already.
What about Zoom? Okay, here's one thing I talked about was like the camera, being comfortable with the camera. So many obviously of us are used to being like, oh my God, check this out, blah, blah, blah. And so we've been doing it for years. But people that now are getting on Zoom, we have office meetings every week and there's like 20 people that it's just their name or it says like iPhone or it says like 1, 2, 3, 4, 5.
Yeah.
And they're so intimidated by the camera. So I think this is another big thing that's going to change. And one of my biggest things I'm like throwing out there, I'm like, get comfortable with looking at yourself on camera and get over what you look like.
Yeah.
Oh, that's
exactly.
Good. Dude, look
Obviously,
at this.
I looked like a
I'm like, if you look ugly, you're just, that's just the way everyone sees you all the time. Like if your hair sucks, your
hair's gonna be out of place, you're gonna have a booger, like you're gonna have freaking spinach in your teeth, and you just have to get over it because this yeah. You might wake up like this. Yeah. I actually challenge you. Picture of yourself just waking up, be old enough to post it because it's those things that will quickly get you over the camera.
Yeah, I remember my first Facebook Live. I was shaking so bad. I'm like, I don't know why it's so shaky, guys.
Never mind, it's your own hand.
It was on a private Facebook. So I'm like, why am I so scared? But it was
weird. Like,
people
get nervous. So get over the nerves. Do like 5 of them. Sweat. You know what I mean? Like don't wear a light colored shirt and be sweaty about it and stutter and shake and make yourself look stupid and then laugh about it on the next one.
Yeah, it's so funny how much you just don't care after.
Make fun of yourself, hands down. The best way to just get over it. Yeah.
That's what you find your tribe, guys. Find your tribe.
Ryan Boker said, Aster Home is a pretty simple solution that most agents can use. We can buy a camera or the rotating device that uses their cell phone. At this point, it's better than nothing. Howard, with introspective moments, says, I'm so frustrated that I didn't do Metaphor for my listings. Not a normal process in Israel, expensive, so I stopped. But now, super valuable. All right, so one last comment before we close the show and have to say goodbye to all of our wonderful hosts. And then there was Tim. Where do you see the marketplace going? Do you think that we can recover in time to do a full year sales in the last 9 months? Or do you think that this will stall all the way until 2021?
Marley, go.
Yeah, Marley, you go.
I don't see us doing a full year of sales, but I do see us having a huge pickup. I think that our winter sales are going to be a lot busier than they were before, that we're going to be slow for the next few months. And then by the time November runs around, that we are going picking up again. I don't really see it picking up too much in the third quarter, but who knows? But I do think that we're eventually going to get the sales back. I just don't think it's going to be this year.
What do you think, Michelle?
Yeah, I'm trying not to focus on that. I'm focusing on the day by day. I'm like, this is what's happening today. And fortunately enough today, I'm putting on a listing. I'm super excited about it. So I'm going to go do a bunch of video after this. And I'm not worried about that because as we know in real estate, it always comes back, right? So I don't know what will happen. This is my first time going through a recession because I've had my license 7 years. So this is my first roller coaster. And all I'm trying to do is just keep the good attitude, keep the positivity rolling, and just making sure that I'm educating the audience, the buyers and the sellers on a day by day or whenever I get the information basis. That's how I feel.
So good. What about you, Daniel?
Well, and that is what's awesome about, like I said, or like we said at the beginning, if you don't follow Michelle and Marley, that's what's awesome about them specifically is they both exude positivity. No matter what's going on, it's always you get information, you get positivity out of it. So I think that needs to remain. For me, I'm lucky because I've had my license 8 years and I didn't have to go. I kind of came out of it or came into it when it was kind of figuring itself out. 2012 was just weird and 2013 was insane. So the market had no idea what it was. It was still just an amorphous blob of nothingness, so it kind of had to figure itself out. And then 2015 and 16 were very interesting. So I'm curious to see what this is going to be like, but I'm lucky to work with a brokerage and a team leader that has gone through this 3 times. You know, he's been in, you know, through this for a while. So I feel very confident, but personally, what I'm doing is I'm still doing the same things every day, making sure to check in with people, and I'm building for whenever this is over.
Yeah.
So to make sure that those people know I'm here, we're not going anywhere. If you need something right now, we got you. If you need something in 6 months when this cools down, or 3 weeks when this cools down, we're here then as well. You know, it's not a, you know, I think unfortunately a lot of agents throw things against the wall to see if it sticks. And if it doesn't stick, they don't work with those clients. And those agents right now are going to get hit pretty hard.
Yeah.
So, but what I think is, I believe that this is a pause. This is just this isn't a crash like we saw 12 years ago where everything just went boom. Because this isn't housing. Housing is being affected, in my opinion. It's not a housing crash. That was straight up people were getting loans that should not have gotten loans. And it was an exorbitant amount of people. I'm using big words because of the white clause. That was an exorbitant amount of people that got those loans that shouldn't have gotten those loans. So inevitably things crashed, right? I think things are being affected. Now, the thing I can't predict is how long will layoffs go, and unemployment claims they're higher than ever right now. There's a dinging. Am I the only one hearing that?
Yeah.
It's just the white claws and the whiskey talking. But I think that is a little bit unpredictable. So, and then, because I've said it on the show before, the people who have always worked remotely, or their job could have been remote and now it is, they're still going to be making money during this time. They're just going to be on hold, waiting until they can kind of jump and make their leap into the market, and then they'll still be there. So we have to make sure we're in contact with those people, as well as, you know, just people in need. So I'm looking at like a pause, which just everything's on hold right now, and then I'm hoping that there's just going to be the rubber band's going to snap back. It's going to be a big boom, and hopefully it'll help boost the economy, you know, once jobs come back and stuff. But right now we have to be there for people that, you know, are going through the tougher times.
So I agree with you, Dan. I think it's all going to be a pause. I think the amount of up activity at the end of this that we see will depend solely on the lending institutions and how well they can recover.
Yeah.
If they can recover in order to give people loans like they have been in the last 5-6 years, then I think we'll probably see a snapback that's pretty fast. And we might see enough sales towards the end of the year to equal what years would have been. Yeah. And the reason why I think that is because you have a lot of people that are quarantined at home that are realizing just how small their home is. And you have a lot of people that didn't think about selling that have now finished about projects around their house and thought, you know, we could sell this thing. And based on what it looks like now that I've finished the thing here, then we could probably do pretty good and make a lot of money if we were to sell it, because the inventory is favorable for sellers right now. If you have a lot of buyers coming back into the marketplace, it could happen in which you have in the last 6 to 9 months of the year, a year's worth of sales. The trick and the kicker will be if the lending institutions can recover in a way that allows them to do the 640, 620 loans again, 580 in some cases.
And how quickly will that loosen up?
Right. How quickly will that loosen up? What will the inventory look like if you do have a bunch of Airbnbs and investors that are looking to offload rentals that didn't make it through? Then you have more inventory, because I think the reason why sales, I mean, they've been high year after year after year, the last 3 or 4 years, but the reason why they haven't been as high as they could go is because inventory has been short. So if inventory becomes more, then you have more buyers. If those buyers are able to purchase, that's the key, in my opinion, then I think you'll see more sales than you would have last year. So that's my prediction. And before we go, let's see, Marley, tell everyone where they can find you on the Instagram and on the interweb.
You sound so Jason Pantana.
Thank you.
You can find on Instagram at Things Marley Does, and it's very entertaining. And Facebook and YouTube, Marley Crestwood, Charleston, South Carolina.
There you go.
I think she's already said it in her comment earlier. She had a comment earlier.
It's just and you can see it right here.
Yeah.
At Michelle Calkins is Instagram, and someone asked about my TikTok with the Michelle Calkins. So
there you go. What about you, Daniel?
Everywhere. D Little Rocks, DLUDWIGROCKS. I can still do that. 3 white claws in. Cool. By the way, I threw everything out the window and I went right to the ruby grapefruit, and this is my favorite. But I'm also 2.5 white claws in, so who knows?
You should taste some hairspray after that and see if it
They're
tastes the
all
same.
together.
By the way, my abs. Should I show you guys my abs? They are coming right in. This is
That's
really
the only
nice.
law.
Take your shirt off.
Oh God.
Okay, wait.
No.
All right. D Robes. You can find me at Ray Zorback as RAYZORBACK, mostly fully clothed images. But thanks everybody for joining the show. We really appreciate you. Thank you so much for Marley. Thank you so much, Michelle. And then it was Tim. So thanks everybody for joining the show. We really appreciate you guys. And
Love
thanks
you guys.
everyone for watching.
Next will be the blonde realtors.
Yes.